It is the first day of September, and it's a Thursday, and we're just rolling right along for this year. If you've stepped outside, you'll notice that great feel of fall. Usually in North Carolina, it means you're probably going to get hit again in September with some really hot days, but it's getting closer and closer. And if you're a college football fan like me, Nirvana is about to erupt yet again. It'll start this weekend as the college football season opens.
The official day of fall, quite frankly, is someday here in September. I think it's on the 20th, 24th, somewhere in that period of time. So we're getting close. It does feel good.
Yeah.
I drew a picture, and as you know me, I'm a picture person.
You're a picture buckets kind of person.
And as EJ always kids me, I'm a buckets kind of person.
Yeah, things in buckets.
I've thought about how we have your portfolio, and three buckets appeared in my vision that I had. One bucket is cash. Another bucket is Treasury bills or corporate bonds, and those Treasury bills typically are a 3-month, 6-month, 1 year in that range. And then the other bucket is an equity bucket. And if you had to look at HMC's money management total, that's where we have our three buckets.
Right, and we haven't added much to the last bucket you talked about, which is the equity bucket, because we were convinced that the market has further to go down, and I think that has unfortunately come forth because we've seen the market really sell off over the last 7 to 10 trading sessions.
We saw a report this morning that showed August on a average basis, the indexes were off 4%, and year to date, all three indexes are off year to date in double-digit numbers. I think NASDAQ was in the 20% range.
Yeah, S&P is down 17% year to date, and we had a really nice June, or is it July? I guess it was July, and then the give back is occurring. So I think the S&P was at 3667 in mid-June, and I'm afraid we're going to be going back down and testing the lows.
That picture of the three buckets historically that we have, or that we do have right now, has provided every review in which we're seeing in the single digits decline. We aren't matching what the indexes are. I want to assure you our history in working with you helps us know that single-digit decline is manageable. We can turn it around when the market presents itself, and we are positioned, quite frankly, to take advantage of that when we think that we, as Gib has said, we might hit this bottom, and then there's some buying opportunities that we could do. We continue to see that bucket in the middle, that is the Treasury bill bucket and the CD bucket and the corporate bucket. Those rates continue to inch up just a little bit.
And then the sweet spot for those is really in that 6-month area, but it's also not so bad on the 3-month. But if you go up to a 9-month, you're getting paid less, just like for a 2-year and 10-year Treasury on a 9-month Treasury bill versus a 6-month Treasury bill. So we're not buying 9-month Treasury bills.
We continue to maintain our buying list, as I've said to many folks. I said it yesterday in an interview. We know when we go down the K&W line what we want to put on the plate. When we go down the stock line, we know what we want. Again, we have identified both growth and dividend-paying positions. We know what sectors we want that third bucket to be weighted in. We use terms that we use this morning, neutral and under and overweight. We know what we want to be neutral in, underweight, and overweight in. We have that. And I know, as Gib does, when we do the review, we are doing housekeeping. I'm going through and cleaning up little underproducers, adding back into those positions equity for equity that we want to be in, and just being sure we got three solid buckets for you within your portfolio.
Yeah, our main focus over the last really couple of weeks has been to transfer from cash, meaning in your money market accounts in your portfolio, into Treasury bills, where we're getting paid substantially more for just holding it for 3 to 6 months. So that's been where our focus has been, so that we can turn this cash into a a generator of at least movement forward.
If you have any questions, please give us a call. We'll be glad to sit down with you, have a phone call with you. We'll Zoom with you. We're here to help and service in any way that we can, and know that we're working as hard as we can. Our staff is working as hard as we can to make you feel comfortable and have good results, because we know it is your money.
And your money matters.
We'll see you next
Have
week.
a great Labor Day,
Yeah,
and
happy Labor Day.
be safe.
Be safe. Go football.
Yes, we're pro football.